recording button. Dan, Brad, what's going on today?
Hi there, Scott. Very good intro. Thank you very much. Brad, my good buddy, how are you?
I'm doing good. I am flying as your co-pilot today, my friend.
Always the best type of flight when you've got such a qualified co-pilot who could easily be flying on his own. It's really not a co-piloting, it's a mutual piloting kind of session. Everyone, thank you for taking your time to join us for the Q&A webinar. We do this every Wednesday, Brad and I. We are obviously one of the original founders of the company, but we want to interact with the people. We never consider ourselves, we are not better than you guys. We've just been doing this a very long time, and it's important for us that you know that we're here, again, in the battle with you. And there is no finish line. We just continually innovate day to day, and so gratitude for everyone here is joining us. So it's May 22nd. We're starting the session. Before we do, just a quick disclaimer, Trade Ideas is not a registered investment advisor. All of the information you're going to be hearing today is for educational and informational purposes only. Please consult a registered investment advisor for specific advice for your personal account. Okay, I'm going to keep this on for a second. So Brad, interesting things here.
Talk to me.
Well, I'm looking at my 30 shares, a short Tesla, entry price at 376, and I want to say that I'm a little upset that I ever got out of it.
I am too.
Because
it's amazing what a small share quantity can do when you actually establish the correct position over some time.
Wow. And this talks a lot to the fact that opportunities in the markets, they flow in so many different directions. Like, meanwhile, look at how much I was up on Facebook, right? And Facebook is right now 40 points higher. So it's a very interesting kind of look. Like Twitter, sort of right around it's on 29, now it's 10 points higher. So I'm just trying to show you, and here I was making a lot of money on the downside. When a move happens, you can take advantage of it with Trade Ideas and with Brokerage Plus. That's the real thing I want you guys to understand. When a move happens, you can really take advantage of it, okay? But perspective, okay? Some perspective. Let me minimize this real quick. Brad, I've been kind of looking over some things on the Alpha Predator channel. And just taking
great channel, by the way. Love it. I spent a lot of time there during the day.
Yeah, great channel. Taking notes on the fact that you have to, if you only go into battle with one kind of weapon, you are hindered. Okay. Now, by the way, both yesterday and today, the AI performed quite well. But I want to get into that a little bit later. What I want to talk about is that there are opportunities for you, okay? Opportunities that present themselves that you've got to be able to take advantage of, but you only do that through taking action and doing some things. Let me show you. So here I am, I'm on SNGX from Alpha Predator, and I'm looking at this stock, and quick notice on the monthly, this is a very long-term look, okay? This thing has been getting killed for a long time. But on the daily, okay, it's kind of making a little bounce. And I want to talk about, like, look at this bounce from here, from 1 to 30. So there's so much percentages that are hidden within these types of moves that what you want to do is you want to be prepared for when something happens. Okay, so here I am. I just created an alert for myself and said, here it is. So if this thing starts going again, because this was a kind of a big day, I wasn't in it.
It's a big volume day too, when you look at the last month of volume.
That's right. That's right. So you make these notations, and the notations then feed idea generation. And this is an exercise, same thing here. We've talked about this before, that sometimes when you get uber fancy and you want everything completely automated and you want to close your eyes, play golf while the software is making you money, you realize that you're missing out on some things that require human intervention. And this human intervention is the ability to unemotionally come in there and make notations like this, and also maybe put these in your like symbols. And then when the price target hits, you instantly are alerted and you can take action. So this is something that we've gone through many, many times, Brett. I mean, we've talked about this concept over and over and over again.
Well, it's a rinse and repeat type of concept. When you find something that's effective and works, you want to kind of duplicate it, right?
100%. And so the other thing too is, guys, we're rinsing and repeating, but remember that every single thing. So here, if I get in, okay, and I'm going to zoom in here a little bit. Okay, if I get in, notice that I've got a smart stop number. Okay, so if this thing and this will be moved tomorrow to whatever the appropriate number is, but you've got a playbook. Okay, the Trade Ideas trading playbook is one that is designed to preserve your capital. Obviously, like you said, I don't need to worry about the stops, and if your account's bigger, then maybe you can let it go to 135. You know, just complete swing trading it to see that it doesn't break lows. But the idea here is that we are trying to find, so one of the things, Brad, you know, as I kind of think spiritually about what we do, we all know that it's not about the money, right? I mean, obviously, trading is about helping you to find value. And I'm saying that not about the money, because the money is not what it's about. It's about what we do with it, spending time with our family and doing the other very important things that having access to capital can provide. So what we're doing here is statistical value search. We're trying to dig through information in a way that the mass market media and the mass market research does not do for you. And all of the information is visible. So you guys know that when you and us and when we give our monies to our 401k, it kind of goes into this black hole where somebody does some things and you don't know what it is. All you do is you kind of blindly look at the returns. Now, the system is set up that it's ludicrous if you are making money to not participate, because there's a lot of tax advantages. But at the same time, we also talk about how it's important for you to have wherewithal and control your own finances as well. Okay, it doesn't mean you put everything and day trade it. Brad, you know, I really hate one of the reasons why I don't like the word day trading is that it reminds me too much of gambling, you know, sitting there in the slot machine. Whereas a lot of times what you want to do is get into a position where then the position works for you and you are no longer having to gamble. You are riding what's called momentum. Does that make sense?
Absolutely agreed. And also, you know, critical with that is your position sizing. You know, how much capital are you going to put towards a position and give you the ability to withstand any of the potential jigs that may occur?
Well, that's 100%. I mean, that's of course the other thing. So Jeremy was taking a look at OBLN and doing the same thing here. And let me see real quick. I'm going to add on anything you can add, include pre and post market. So see, without it, it's 92, so it's up a little bit in post market. So one of the reasons why we like to keep an eye out and participate in these smaller stock kind of names is that this is what can happen. Now, we've seen this in other stocks. I'll just give you an example. Okay, DFFN, it's not trading the same volume, obviously today, but if you zoom out, I mean, you see a picture of returns that are quite extraordinary. we want to be somehow participating in that kind of a situation. And by the way, Brad, it's almost as if DFFN is trying to set up for another run to this.
Yeah, it is a good looking setup right there.
So what I'm going to do is, and yesterday, by the way, there was a AI trade in it. There was a 25-cent loss, but we were talking about how, let's see, where was the signal? Entry at 512. So I'm going to do this again, and I'm going to say, create a price at 5 above AI entry signal. So when you zoom in, so you guys see what I'm doing. I'm doing right clicking and I'm setting that in there. So Brad, this then dovetails into something that's simple. One of the things that Brad and I have always been frustrated about when you deal with the markets is how people overcomplicate things. By the way, to some extent, we're guilty too because our software is very advanced. In fact, Brad, somebody asked me.
I want to interrupt you real quick because it just kind of hit me as you were hovering over that buy signal from Holly yesterday on DFFN, how it showed you it was a loss. Actually, it was a loss only in the risk off mode. It wasn't a loss if you were holding that position, you know, through the end of the day. So there's a little bit of an ambiguous bit of data right there.
No, well, not ambiguous, but we're working, guys. You know what's interesting? I want to be honest. You know, we invented this technology and we call it AI. It's not really AI in the sense that people think. Now, it's a very fancy, high-powered calculator that of which the way it's doing it, we could not possibly manually replicate it, but it's not thinking. It's doing exactly what we tell it to do, and I want to make sure people know that. We're not trying to, like, you know, do some weird magic or anything like that.
I think that the proper terminology is what, machine learning?
Yeah, machine learning, but really, Brad, it's applied statistics that the machine tells you is working, and then it continues the calculation. So really, it's a calculator that's working 24/7 and taking its results. Okay, this was good. I'm going to use that data. That's all. And that kind of brings it down a little bit to the proper earthly levels. But what we're very good at is watching everything, and that's one of the advantages. So one of the things that we talk about is how there's much more to trading than simply day trading. We brought that up, okay? So let me pop into the AI for a second. I want to show you something. I mean, Brad, this is one of maybe the best. It struck me. It struck me, and I want to strike you with it.
Wow.
Why is it, you know, what is it that we're doing, guys? You know, I want to, let's first of all, let's start someplace. In the beginning, there was a buy signal at $3.70. Now, obviously, you would have not have held it because it got lower. But interestingly, Brad, and you and I, we can kind of talk about it this way, that let's say you were in it here. Let's create a notation. Okay, so let's say that like right over here, then you probably would have got out with a small loss. Okay, nothing happened, nothing happened, nothing happened, nothing happened, nothing happened, nothing happened. One more time, okay? You try it again. Probably got out with a small loss. Try it again. Held, possibly got out with a small loss. And now you're sitting there not in it, okay? When it goes above this when it gaps up the way it did, where it's all above these levels, okay? So it went from 581 to 9. I mean, it's very, very volatile. I mean, this is a therapeutic stock. But the point is that when it took out this long-term level on this gap up, you were in a different world altogether, okay? And here at $6.80 on the close, it would have gapped up to 905, closed here. And from this point on, so it had a range. And again, you can mark the lows, and this all has to do with emotions, which is why I'm just kind of trying to tell you a story that it isn't easy, but you had a clue as to the direction, and you can always set the alerts. And what I'm going to talk about a little bit something, Brad, in a second that we're going to add, which I think is really going to expand on what we're trying to do. So this was the original one, and you could have had 3, so let's say 1 trade, lose money. So let's say you lost $50, lost another 50, maybe made 50, and I'm just trading like, I don't know, 100 shares, 50 shares, and maybe you lost 50. All of this alert price level. And it wouldn't have been looking that interesting, but the point is the costs of trading are so small that you can always do trial and error practice. Like you can get in small. If it starts working, you add. If it doesn't, then you get out. And that getting out is that whole notion of the trial and error, trial and error, trial and error until a trend is set. But clearly, in January, this downtrend was broken and was never unbroken afterwards. And then look at what happened. Okay, so you have the buy signal here. Would have been tough. Also, you could have also lost on this one from 15 to 13. But the idea is getting back in, because you're just trying, because knowing you're going to lose small. The idea is to lose small until from 15 to 25. That's it. There's no more losses. Once you catch a wave of, and this is, Brad, what I'm trying to say. Once you catch a wave of the trend, everything that you did here and here and here, and even if you did a little, you know, something here that wasn't exactly right, you would have made it up percentage-wise in ways that, I mean, think about it, from 6 to 25. This is the kind of stuff that really, to me, is what goes it's ignored by most people. And by the way, there's also the whole notion of pressing, which is a more advanced strategy. But certainly, if you bought here and you were still in and there was another buy signal, you could add, because you would have been profitable, add again, and continuing twice until today you have your first sell signal, which again, just from statistics, that's what the software says could be in play. But Brad, isn't it kind of an interesting story when you look at it through the perspective of not just pure day trading, one and done?
Yeah, there are just so many different characteristics to be applied when trading. There's just not one way to do it. There's not just one time frame. There's just not one type of stock to trade or one number of stocks to trade. There's so many different ways to take your talents and apply it to the market. And
so to that end, you know, this is what the AI did today. We have 3 different modes. We have a mode called risk on, which gets you in and tries to stay all day, but will get you stopped out. We have a mode called full risk, which is if you're like, I'm not going to do stops, because again, you can also allow yourself to have some human interaction with it, where you can say, okay, well,
it's an information portal as well. Having access to the data points as to, you know, how the profitability is. Is it better to keep these positions longer? Is it better to keep them short? This is all data points that you can use and internalize to adjust your trading style.
But ultimately, I mean, if you really want to know what people are trying to do, and remember what I just showed you guys, that this one, AXSM. So here's a buy signal in Z. GNX, which was a beautiful 2.3% move in one day. And again, I'm just kind of giving you the bigger perspective that when we, and this happens on the downside too, but when you're in this game, you're shooting for bigger percentages. Okay, so here's one, comes in, never touched the stop, and just beautiful rally. This is an opportunity that, again, if it can go, you certainly could potentially have kept this trade as a swing trade, because look at where you are relative to your swing time frame. So you got the swing exit. Let me expand this. You've got the swing exit right here at 36.55. Okay, that's roughly about the 20-day lows, and you're bouncing off of them. It's very possible that if you're in like 100 or 200 shares, you can just keep this. And notice I put in a signal right here, Brad. This is my signal saying it's trying to fill the gap. That's all it is.
Further confirmation that you're in the right spot, right?
Exactly. Because something bad happened here, very bad. You know, nobody wants to be in a move where overnight, boom, something like this happened. Most likely earnings or something to that effect. But certainly here, if we start to rebound and it gets back from, you know, 39 to 50, you're in quite a bit of a...
Well, and you give yourself the ability to stay within, allow yourself to ride it up with all the jigs that may occur, because you've established such a great position and great price, right? That when you've established that, you can just afford the movement that's going to occur.
And I'll tell you, I can remember, Brad, the thing that we said about Tesla. Why did I get out of it? Well, because I doubled down and it had so much volatility that kind of thing.
I can't even tell you how position sizing is just so important. It really is. It
you
allows
have to have a size that's comfortable for your account. There's no other way I can describe it. You have to have size that's comfortable for your account. But for everybody that's watching this, okay, notice what I did here. These are maneuvers that you can mimic. You know, you can even say, okay, I'll go a little lower, 39.63, because you're saying that it's above this area of resistance and this is the next big one. You know, you can also, the beauty here is, and I really cannot underestimate what I'm saying more. If you don't chase the money, meaning like one of the biggest pitfalls of trading, and I've been as guilty of this mistake as anybody. You know, again, guys, I did not create this company because I started trading and was instantly making money all the time. I still have times where I struggle, and it's the lessons you learn from the struggle that give you the insight to hopefully help other people. So one of the things I want to convey here is position sizing when you don't need to go all in on one thing. So here, if you were in 100 shares, again, hypothetically for your account, so you know where you can, okay, I can withstand it going to 36.59 because it's only going to be like $300 downside. Well, then if it actually goes up, you are then not worried about getting in. You're already in, and you can establish a position and let that position run. And I just want to talk a little bit about, imagine doing that at these critical levels from 33 going all the way to 54. I mean, these are beautiful kind of waves. And I'm not saying I rode this, but I'm just saying that often people say, don't try to pick bottoms. Brad, you hear that all the time. But that's a statistical thing only if you stay in and the bottoms continue and you keep staying in and it keeps going lower and lower. And I, by the way, have done plenty of that myself as well.
Yeah, it just requires discipline, right?
Well, discipline and wherewithal, okay? Discipline and wherewithal. And you want to also trust your eyes and, well, how about this? We all have our own feel, okay? Everybody has their own kind of feel for things. Now, I like to not, like for example, you can, my version is going to be different, but I'm going to add some SMA here. Okay, so here's an SMA. And Brad, everyone else has a little bit different way that they do it, right? But it's still indicator.
Yeah, you just have a more confusing way, but same thing.
Exactly.
It's super easy to figure out.
Exactly. You can use these kinds of tools, like today, for example, this move in ZG and X popped this thing above the 20-day SMA. So that can potentially, again, in your eyes say, okay, I'm going to get in this and I'll get out if it closes below it. So you can kind of use this as you can use these things as trigger without getting very complicated. That's all I'm trying to say. And notice here, again, mean reversion is a very powerful tool in both directions, up and down. So do not be afraid to try to find moves. Like again here, let me just mark up. Okay, so notice here you had a low. Okay, when this low was broken, it really went 1, 2, 3, 4. Kind of had a really big move downwards. But when it rebounded back to this area, so what happens is these areas, they become either support or resistance. So this, once it crossed back up, this became its support level again. And Brad, it did not touch it until the gap down. And where are we right now? Look at where we are. Isn't this interesting, guys? Remember what happened here. So there's like, you're doing a little bit of detective work, visual detective work with the tools that we give you. And I'm just kind of trying to show you that the AI not only is giving you trades during the day that you can get into and profit from, but it's also showing you moves that are happening that you can take much longer term approaches to. So here was and notice this. This is one of the things that why our product, I think, is well received, Brad, is because look at this window right here. Holly Neo. Today, this was the best AI. Long, short, short, long, short, long, short. What does that tell you, guys? I'll tell you exactly what it tells you in 1 second. And this is just a lesson from, since you're on the Q&A and you're hearing from the partners and what's going on, take a look. We've had a very big up move from last year to the highs this year, which happened in May, right, Brad? So
Yep.
basically, have gone up for 5 months straight. Then we had a big pullback, and if you look at this area right here, which is really where we've been since May 8th.
Really volatile, a lot of gaps.
A lot of gaps, lots of volatility. You must understand that if you are, again, and I've said this many times before, if you are a surfer, this is what's called chop. Chop is where you're not going to be sitting there with your buddies going, hey, let's wax up the board and hit out there and ride some smooth waves, because that's just not what's happening. There's a lot of confusion in the market right now, and that confusion will affect everything. You, the AI, everything, because no matter how good your statistics are, if we're in an environment where there's noise, and noise meaning statistical volatility in both directions, there's no amount of magic or guessing, and again, I hate using the word magic because you know why, Brad, but what I'm saying is that the psychology is simple. Get smaller, okay? And this is why I want to talk about this tool that we have on the AI. So look at the shares.
All different, right?
All different, but I want to show you something, and you guys probably already know this. AI trade size. So what I'm saying is I'm risking $50 on every trade in this particular example, but you can go and say something like, I don't really want to risk 25.
That means if you get stopped out, you're going to lose a maximum of $25.
Correct. Think about that, guys. Jeremy, you're seeing the advanced version. This is the premium version. This has this has everything, and we'll talk about how cheap it is on a day. I mean, you're talking about a software that gives you all the research that you could ever possibly want, and it costs this one in terms of a daily. How much would you pay for this on a day? It's about $7. Okay, we charge you monthly or annually, but it's roughly $7 a day for this. So you think about it in terms of your Starbucks or your lunch or whatever it is that, I mean, conceive what you're doing. And we are the only software company, guys, and again, I've said this before as well, we're the only company that takes calls and actually does them. In other words, we know that at some points, like this one, full risk didn't work out. Risk on didn't work out. Risk off didn't work out here, and risk on didn't work out. But the beauty is, because we have the risk parameters all set, we know that our clients can try and still succeed because the errors are small. You know, if you're in 100 shares here and 50 shares here and 33 and 33, you know, here's one, you would have caught two really decent size moves and still would have probably made money, even if it was just only risk on. So again, you can kind of see like what mode would you be going in on. So here, risk on would have been 120. So you probably would have been up $50 today after slippage or whatever in commission, but still on a down day. See, that's the beauty of what we do, is that a lot of times everyone jumps into and they want the thousands of dollars coming in every day, not thinking about the fact that you can really learn so much through the warm-up process, meaning stay small. And again, you can size this any way you want. You can even go as much as $15. I mean, it's kind of crazy, right, Brad? But I mean,
yeah, but there is a point of diminishing return where your commissions, you know, are actually an expense that you need to have a certain size trade for it to actually make sense, right?
Right, but I think even at, I mean, even here, you're not too far off. Trading 60 shares or 45 shares, but it gives you a sense of comfort and a sense of feel. You know, whereas if you jump in right away and start trading, you know, larger size, and let's talk about like what these options look like. So let's say you were investing in each one of these trades $1,000. How would that look? Well, that's what it would look like. You would not have done well.
Well, you do need to actually go through the. I think when you do that, it doesn't automatically select which risk mode is best. So I think at face value it looked bad, but if you go to risk off there, it's not terrible. If you go to risk off there, it's not terrible. And
well, I'm just saying that we also teach. So this is the learning experience. How do you want to trade, guys? Do you want to trade where it's dollars per trade, where it's the same? And that's what a lot of people teach you, but we find out that's really not the way, by the way. I've never seen, Brad, this, I mean, even if you say 10,000. Okay, how about it? I mean, you certainly can make it work, obviously. And notice here, but look at all of a sudden now, in these stocks, the smaller ones, you're just going to be in a lot more shares.
Yeah, and I think that this is something that we're going to work on our team to make this a little bit, I guess, more consistent for the cheaper stocks. You're just putting yourself at a little bit more risk when you're doing the dollar quantity on the cheaper stocks.
But what other technology allows you to share size yourself based on the stop? I just don't know of any, okay? And if you go back to what people teach, and when people try to learn how to invest, losing something like $50 per trade, if you're losing all of them, that's not that far off of what, you know, you should be doing. And that can certainly provide you with some ample opportunities to be sized appropriately and not lose. So the reason that I'm focusing on this is there's just so much here that goes beyond just the calls, right? So much more. So, okay, let's talk about the big stuff that's happening. Because again, Brad, we're so quick. We talk so much. Or is that you or me that talks so much?
You're the talker, buddy.
All right, so I mean, history, all of you that have premium can do this, what I'm about to do. You can go and see, historically speaking, what happened to the trades that you did yesterday. We are going to be creating a whole product out of this that is the swing trading product. Basically, we're going to be creating the swing trading AI. So that you can find the best of the best, stay in it, hopefully as long as you need to stay in it, as long as it hasn't taken you out through your stop, and then profit from a move like this. One of the ways that we're going to do that is we're going to automatically set notifications for you when something has either re-triggered or when it has crossed above. So here, for example, yesterday we had a buy signal right here, okay? And let's see, which one was this one? GII, okay? So we had a buy signal today. Like if you had held it today, you would have been stopped out because it went through the stop. But remember what we said. Once it turns back around, you're back at the signal. So all we're saying is that, hey, this one didn't work out, or you got the money that you had yesterday, but today there was a big gap down day. And I'm just talking through the stock, not that, again, I would particularly be in this one, but just saying that here, you're saying, hey, this is going to turnaround play. We're back at this AI signal. Let's try it one more time. So we're going to be building and creating a whole swing strategy for you. And by the way, this is another example. So Brad, yesterday we had this was yesterday's AI calls. Very, very strong. Yesterday, you had this move on this stock, buy signal right here, sell signal right here. Today, there was a pullback. Potentially, if you were swinging this, you would still be in, right, Brad?
You sure would. You have to be willing to forego some of those profits in the short term, right?
You have
stay in the long term.
And that's the notion that that we want to get you to understand that if this thing all of a sudden can possibly get above these critical levels, like the 20 period SMA, you're in a totally different bracket, and then you can catch, again, a rebound or rather a continuation of this trend that really starts to pay you in a way that would be impossible to match in pure day trading terms. So that's the other thing that we're trying to do, help you to get longer term. This one, for example, yesterday you made the money. Today, you would have been stopped out. Yeah. So Marguerite, risk off, exits the trades exactly. Let me show you. I'm going to zoom.
And Dan, I can do an odds maker demonstration if you want. I've got some strats.
I want to do a couple of things here. Hold on a second. Let me go to today, and I'll use the ZGNX. Okay, so let me get rid of this just so that we can see better. So Brad, Marguerite, notice how there's a color here. So this is risk off. In other words, we time these trades for a specific statistical time set so that the computer can do its thing, and it's optimized because again, if you look at the big math numbers and we look at thousands and thousands and thousands and thousands and thousands of trades, overall those thousands of trades, it's not always till the end of the day that you make the most money. So we optimize it for a certain kind of time where the computer says, well, based on what has happened, this is the best amount of time that you should do it. And so this is that time frame. It's this time. So in this case, it would have been from 9:50 to noon. Brad, am I reading that right?
I turned my head.
Here, let me zoom back here. So here, yeah, let's see, ZGNX, when did we get into that one? Entry time 9:57, so that was the buy signal, okay, at 9:57. And notice it didn't go right away. You know, there was like some oscillations, and then all of a sudden it went, and the optimum, the back-tested optimum time, the risk off would have gotten you out at 38.59. And if you had held it all day, you would have gotten 40 more cents.
Yeah, it's important to note that that tailwind strategy that produced the ZGNX is that we back tested and it's optimized using a 2-hour hold time. So all things going great on that, the best you can do in risk off is to hold that for 2 hours.
Right. So there are some things you can do. You know, you can say, okay, get out of half. So you lock in half and let the rest run. And then again, and then you can decide for yourself, well, either I'm going to stay in it as a swing trade or I'm going to take the rest off the table.
And you know, Dan, having had the benefit of looking at this data for a couple of years now, it's really evident that when you have something that exits because of a time stop, it really does warrant you taking a critical look at that and deciding whether this is something that you should continue to be in. And I think what Dan said, by taking a little piece off the table there, really does buy you that extra staying power to give it a little bit of wiggle room and see what it has in it.
Well, let me explain. Notice how here we have specific exit reasons. Reduce
risk. Those are all risk off exit reasons.
Right, risk off exit reason. We should put that in. Do we have that? No? Okay.
Yeah, we could fit it in there.
Yeah, we need to. So these are the risk off exit reasons. So reduce risk means that it's starting to go, okay, but then it kind of comes off. So here, where do we do this? Which one is it? UPLD? Okay, so here, signal, it goes up, starts to come down, and the software didn't like it because, again, notice it went below the thing. Risk off mode says, I don't want to turn a winner into a loser. So that's what you get. So you have to, and sometimes what ends up happening is you lose the opportunity of the run happening, because again, remember, this is statistics. It's not like you're trying to tell the future. You're just saying,
the way the risk off works, just so that people know, just a little bit more insight and data to it. So the on support strategy, that's a 60-minute hold. So after about 3/4 of the time that expired, if that stock is not doing what the strategy thought it might be, it'll produce that reduced risk exit reason. We also have one that didn't show up today on any of the 3 segments, and that's the profit save. And that's a little bit more where you have a stock that really showed some great opportunity, really ran up, put you in a very profitable spot, and now is starting to pull back, kind of like a trailing stop, if you will. And so that's what the profit save algorithm is.
Let me see if I can go to yesterday, because I think we had here's one, CLR. This is a great example.
CLR is a target hit, which is even better, right? That's
right. So that's when you get in, and it goes really quickly, and you get a target hit, meaning that you get made so much that it's worthy for you to take some.
Make your intraday chart a little bigger so that we can see, like maybe a 15-minute or zoom out, yeah, like that, so you can see in real time.
Here's the buy, boom, target hit. I mean, guys, this is like, you know, all of this was in autopilot mode. This was all happening for you. And the beauty is that when you use this with Brokerage Plus through IB, all of these trades can be initiated for you automatically. They can even, if you get stopped out, but it continues back, it will re-enter and readjust stops. It's really trying to become a good trader for you, to teach you.
And it also can be kind of like somewhere in between. It doesn't have to be that fully automated aspect. You could have it kind of treat it like a gray box, if you will, where you let it get you into the positions, and then you can analyze it further, move your stops to something that you're more comfortable with, and treat it, you know, kind of a half and half, if you will.
That's right. Like you can easily say, okay, in this case, I'm going to take this stop and I'm just put it at the lows, you know, just hypothetically speaking. So questions. The big thing that we want to talk about is we're merging all of the AIs together so it'll be in one channel and you'll be able to paper trade them soon. That's a big thing that we're pushing for. Hopefully by the end of the year, we're going to have a full paper trading mode available for both standard and premium subscription, where all of these trades, now this is already kind of paper trading for you, but it'll be more hands-on where you can say, okay, fully go auto, and it'll mimic exactly what you would see in your Brokerage Plus. And again, we'll do another Q&A when we showcase that. But the idea here is to bridge the gap between what you see on the AI, what you see on Brokerage Plus, and all that stuff. Does that make sense? Let's go with the PowerPoint. You guys were asking how much the software costs. I'm not saying that we're specifically cheap, but to be honest, for real-time data and real-time analytics we know for a fact that there isn't another product on the market today that does what Trade Ideas does. It just does not exist. The only reason that we are not as big as other people is because we focus on technology and not on advertising. You know, we do advertise, mind you, of course, but our strength is you guys, word of mouth, telling other people that, hey, this is kind of cool. So we charge yearly or monthly, and so you can just do the math, but our standard subscription is almost $3 a day or almost $4 a day on a monthly. Premium monthly is just under $8 a day or under $6.50 a day if you go for annual, and that gives you everything. That gives you AI, the whole kit and caboodle, okay? And for everyone who's here, if you want to tell your friends, or if you aren't a customer yet, please use the Holly Flowers 15% off of your first month or year of Trade Ideas. We have Barry's Trading Room, which is always on, helping people everywhere to do better in the market. He's not only a good educator, but he also takes trades, and he does trades of his own. He does AI trades, and there's a meritocracy of people that help one another. It's a very good environment for you to learn how to interact with the software and improve all of the learning curve aspects. My good friend Jamie Hodge and I, we do our Trade Ideas Friday podcast, usually, unless we have guests, every Friday. So please look that up on your favorite podcast app and tune in. Also, we provide you educational material for free to help you with understanding that the market goes in both directions, long and short, and you should really know how to do both of those things to be an avid investor. There's an education curriculum, if you visit our website, that's ongoing all throughout the week with all of the requirements for advanced, intermediate, and beginning levels of traders. And there's my dog assistant. So we're easy to get a hold of on social media at Trade Ideas, at QuantBot or Today Trader. Like us on Facebook, and of course, always shoot us an email at info@tradeideas.com any of your questions. Scott, are we all good?
Yeah, I think that covers everything. We'll have the recording up later on tonight or tomorrow morning, and you get an email reminder tomorrow from GoToWebinar about where the reminding you where the YouTube playlist is where you can find that video. Thanks, Dan. Thanks.
Yes, Harkesh, there's on-site training. Just go to the website and you'll see it all.
Just go to trade-ideas.com/training, and that'll take you right there.
Yep.
Thanks all.
All right, everyone. Thank you so much.
Have a good one.
Take care.
Bye now.